Start the broadcast. Okay, you ready?
The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. This is Amy Gray from Shoreline. I'd like to welcome everyone to our webinar, EMV on Your Mind. Today we have Billy Tran, one of our resident EMV experts, joining us to tell us a little bit more about the state of EMV as we get closer to the fraud liability shift. Welcome, Billy.
Thanks, Amy. And
So
thanks to everyone joining today.
Oh, sorry, Billy. At the end of the webinar, we're going to do some Q&A, so please feel free to type in any questions during the presentation in the question box, and Billy will do his best to answer those for us. And we're also going to be recording the webinar and placing it on our website in a few days. And we're also going to send out a PDF copy to everyone, so look forward to that. So I don't know about you, but EMV is definitely on our minds here at Shoreline. We're very busy, and we want to hear more from Billy and what he can tell us about what's happening. Billy, are you ready?
Yep. Thanks, Amy, and thanks again to everyone taking the time to join us this afternoon. Hopefully, most of you listening today are aware that the EMV liability shift date is now just about 35 days away. So hopefully the majority of you have started or are in the process of launching your own EMV programs. If you haven't started, I think unfortunately it'll probably be fairly difficult for you at this point to have cards in the market by the October deadline, but certainly it's never too late to start. So the objective today is really to give you all a broad overview of EMV, how the technology works, the trends we see in the marketplace, and the key considerations you as issuers should be thinking about in the weeks and months to come as you launch your own EMV programs. So just as a quick introduction, for those of you who aren't familiar with Shoreline, we are an independent provider of card production and personalization services, serving primarily the community banks and credit union market for the past 25 years. In May of last year, Shoreline was acquired by Gemalto, and Gemalto is the leading provider of EMV technology around the world. In fact, every year Gemalto produces in excess of 650 million EMV chip cards serving financial institutions all around the world. So obviously we're really excited that EMV is finally coming to the US and having the opportunity to kind of share our expertise and lessons learned with you all here today. So before we jump right into EMV, I think it's always important to establish a little bit of context around the payment market before the invention of EMV and kind of the market drivers that led to the invention of EMV and the trend towards mass adoption that we see today. So if we kind of take a magic time machine and go back to 1985, I guess most of you will remember that the primary method of payment in the 80s was either cash, personal checks, and certainly credit and debit cards were available as early as the mid-80s, but not nearly as popular as they are today. And the reason payment cards weren't as popular in the 80s was simply the acceptance infrastructure or lack thereof at the time. If you remember, in the mid-80s, the internet didn't exist, Google didn't exist, and the idea of being able to process a card-based transaction instantaneously at the time was really kind of science fiction. If you went to a merchant, handed them a credit card, most likely they'd pull out one of these carbon paper knuckle buster machines. They'd have to manually write your number, and the process end-to-end from transaction to settlement might take anywhere from a few days to a few weeks, and certainly very far from what we know today. And that was primarily one of the biggest challenges in terms of adoption of card technology in the 80s. So as early as the 80s, the mid-80s, you saw a lot of different payment environments start looking at using chip cards as a way to expedite or simplify the card-based transaction process. In France, they introduced a chip card program. In Germany, they introduced their own flavor of a chip card program, and both were very, very successful. However, the biggest challenge was that both of those early chip card programs were entirely proprietary. So your French chip card was great in France, but as soon as you crossed the border into Germany or the UK, you couldn't use the card. And similarly, your German chip card is great, but as soon as you took the card elsewhere, it didn't really work. So as early as, kind of the mid to late 80s, there was a lot of momentum around using chip cards, but everyone kind of realized that without some sort of standardization, the technology would never really take off. So as a result, you saw Europay, MasterCard, and Visa get together in the mid-90s to define the standard that we know today as EMV. And really, that's just a specification for how you can use a chip to secure cardholder information and secure a payment transaction. And obviously, the benefit of that is enhanced security. But the additional benefit of that is this idea of global interoperability. Once you have kind of a standardization around this technology, you have kind of the guarantee that once you have this chip card, it'll work in the UK, it'll work in the US, or you can take that card to your local Walmart, whether it's in the US or in Singapore, and know that that chip card will work. EMV in itself comes in 3 flavors. There's a contact EMV transaction where there will be a chip on the card, and when you go to a point of sale, you will dip that chip card into the point of sale, and you may be prompted to enter a PIN or to sign for the transaction. You also have contactless EMV, where there's an antenna also embedded inside that card. And at the point of sale, what you'll do is you'll take that card and wave it in front of the point of sale terminal, and the point of sale terminal will beep to let you know whether or not the transaction is approved or declined. And finally, there is a third flavor of EMV, which we call mobile EMV. And that's where your payment credentials are not stored on a card, but stored within your mobile device. And at the point of sale, you would wave that mobile device over the terminal. The terminal and the point of sale would, or the terminal and your mobile device would communicate, exchange some information, and from there, the transaction would either be approved or declined. All 3, EMV covers all 3 of those types of user experiences. I think what's interesting to note is that most of you are probably familiar with Apple Pay, and what you may not know is that Apple Pay is actually a form of mobile EMV. What Apple has done is that they've taken your standard EMV payment credentials and stored it inside your iPhone 6. And when you wave your iPhone 6 in front of the point of sale, you're actually completing a mobile EMV transaction. So while EMV is relatively new to the US, it's actually not a new technology. It's been deployed all over the world. And in fact, the US is really probably the last place on earth to really adopt this technology. And historically, I guess the biggest roadblock towards adopting EMV in the US has been there's been kind of a chicken and the egg problem. In order to accept EMV transactions, merchants need to upgrade their point of sale terminals. And most merchants in the US have said historically that they don't want to make the investment to upgrade their point of sale simply because there weren't cards in the marketplace and consumers, American or US consumers did not have EMV chip cards. And conversely, financial institutions in the United States have long said that, well, why should we issue chip cards if there's no point of sale infrastructure for our consumers to use them? So there's been basically this stalemate for the past 10 to 15 years. And so what Visa and MasterCard announced in 2010 and 2011 is this idea of fraud liability shift. Today, on a traditional magstripe card, it's the financial institution that bears the cost and risk of fraud. Liability shift says that by October of this year, if merchants don't upgrade their point of sale to accept EMV, then the merchant becomes liable for any fraud that may occur. And obviously, this created a strong incentive for the merchant community, your Walmarts or Targets out there, to upgrade their point of sales to accept EMV transactions. And once the acceptance infrastructure is in place, there becomes an incentive for financial institutions to deploy EMV chip cards into the market. So Visa and MasterCard and the different payment associations announced this kind of liability shift as far back as 2010 and 2011. But really, as recently as 2012 and 2013, really very few cards were being issued to the marketplace. It wasn't until the major breaches in payment security that really kind of sparked the momentum that we see today. I guess all of you have heard of the big Target breach that happened back in the Thanksgiving time of 2013, Home Depot was also subject to a massive data breach. And both of these events really were the catalyst for the market to really shift towards EMV. Suddenly, after those two events, merchants began aggressively deploying new point-of-sale terminals, and you saw financial institutions begin massively deploying cards into the marketplace. So the predictions in terms of number of cards issued to the market are fairly staggering. As you can see, between 2011 and 2013, less than 40 million cards were EMV chip cards were issued into the marketplace. In 2014, kind of as a result of the major target breach, we estimate that roughly 255 million EMV chip cards were issued. And in 2015, most of the consensus seems to be that roughly 575 million or more cards will be issued into the U.S. market this year alone. And that trend, we believe, will continue in the next years to come. So what is EMV and how exactly does it work? And I think to understand how EMV works, it's important to understand how a traditional magstripe transaction works. And today, if you look at your magstripe card, inside your magstripe is stored your cardholder number, potentially the expiration date of the card, perhaps the CVV value. And what happens during a magstripe transaction is that you as a consumer will go to a point of sale, you'll swipe your card, and that information that's stored on the magstripe will be transmitted to your financial institution. The financial institution will look at that information and either approve or decline the transaction. The problem is that the information on that magstripe is static, or it's fixed. It never changes over time. So if someone was able to read your magstripe, they'd be able to make a duplicate card or a counterfeit card very easily. And with a counterfeit card, if you swipe it at the point of sale, there's no way for your financial institution to determine whether that card is a real card or a fake card, because that information is always fixed. Similarly, as a result of a data breach, where sometimes this type of your magstripe information may be stored on a database somewhere, it would be very easy for a hacker or a bad guy to take that information and make a duplicate or counterfeit card. So this idea of verifying that the card is real is not possible in an EMV world, or is not possible in a magstripe world. The way EMV works is that you have your cardholder information not stored on the magstripe, but it's stored on the chip along with other information. And for each transaction, when you insert your card into the point of sale, the card will calculate, let's say, a one-time code. And that one-time code is transmitted to the financial institution to verify that the card is in fact a real card. So if someone was to steal or try to spy on that information as it's being transmitted between the card and the financial institution, it would be impossible for them to make a duplicate card. So EMV is really, really great at making each and every transaction unique, so that as a hacker, you're unable to take any information that you may skim to make a counterfeit card. So for every EMV transactions, 3 steps have to happen. When you insert your card into the point of sale, you have to verify that the card is real. Then the second step is you have to verify that you are the real owner of that card, and that can be accomplished by either entering a PIN code or signing the transaction. And finally, you can the financial institution needs to either approve or decline the transaction. And of these 3 steps, there's any number of different ways that you can configure the chip card to behave. You've probably heard terms like online, offline, chip signature preferring, PIN preferring. These are all options that define the user experience and how these 3 steps happen at the point of sale. And you as an issuer have the ability to configure all those different options when you issue these chip cards into the marketplace. And the way that that chip card behaves is sometimes referred to as an EMV profile. I like to think of it as kind of the recipe that defines how that chip card behaves when the consumer is trying to make a transaction. And so as a financial institution, you're fully in charge of your EMV profile for every chip card that goes out. Whether that transactions happen in an online mode or an offline mode, whether cardholders need to verify using a PIN or a signature, the different risk tolerances that the card will accept for each transaction, and whether the transaction happened in a contactless or contact mode. So all these ingredients of the EMV profile, you could go onto the EMVCo website, download the EMV spec, and look at the hundreds and hundreds of different parameters, and individually with your perso provider and processing partner, define your own EMV profile. Obviously, that would be fairly complex and time-consuming. So, sort of to simplify that process, MasterCard and Visa and the different payment associations, specifically for the U.S. market, have defined what we call standard profiles. And these are kind of off-the-shelf profiles that you as a financial institution can pick and choose from to simplify the process of kind of deploying cards into the marketplace. Visa has kind of a standard EMV profile that they're targeting the U.S. Debit market. MasterCard has a few options as well, which you can pick and choose from. Certainly, you can go and download the EMV spec and define your own profile, but most of the market that we see today are really kind of just using these off-the-shelf profiles that are provided by the major payment associations. So I guess many of you probably today have never seen an EMV transaction, so hopefully this video streams properly. And what it shows is an EMV transaction that we made just a few months ago at a local Walmart. So hopefully if everyone is able to see that video and the streaming worked properly, you'll notice that end-to-end that transaction took about 25 seconds, which is probably very different from what many most consumers are used to in terms of the way a traditional magstripe transaction happens today. I think the average magstripe transaction today averages about 8 to 10 seconds or even less. And so that's why we believe that kind of as a second step after this EMV migration, there's going to be a strong demand from consumers and merchants for something that's faster and more convenient. And we believe that contactless will become the standard moving forward as a result. The big challenge with contactless historically has been the acceptance infrastructure. Most merchants, while all of the point of sales in merchants today that accept contact EMV transaction have the ability to accept contactless as well, many of the contactless point of sales out in the market today have not been activated by the merchants. It's actually the merchant's decision whether or not to activate the contactless portion of those point of sales. And as many of you may know, there's a merchant consortium out there called MCX, and this is a group of all the major retailers in the U.S. like Best Buy, Target, Walmart, etc., and they participate in this MCX consortium. And the participants of the MCX consortium have so far deactivated the contactless portion of their point of sales. We believe that trend will change simply because Apple Pay, many consumers wanting to use Apple Pay are not able to do so at these merchants that participate in MCX. And we believe as momentum grows around Apple Pay, many of the merchants will begin activating those contactless point of sales, and as a result, not only drive utilization of Apple Pay, but also drive the deployment of contactless EMV cards as well. So fundamentally, as an issuer, I think the big question or challenge you face is, how do you launch your EMV program and what type of chip card do you need to be buying and issuing to your cardholders. And unfortunately, there's been a lot of misinformation or not consistent messaging about the type of product a financial institution needs for their EMV program. And this is kind of a quote that we hear a lot from financial institutions that we serve. They'll say the payment brand is recommending one chip with 4K of memory, but the personal provider can only support a different type of chip, which happens to have 10K, and the instant issuance provider needs a different type of chip, which has 12K, and what's the difference between SDA and DDA? And these are all questions that we hear on a daily basis, and there's sort of a general consensus of confusion about which type of chip product to buy. And certainly, you can all kind of, as you look at what type of product you want to deploy, you can go into the details and try to understand what the different payment application options are, whether you want VSDC 2.8.1 AM2S, or you want a flavor of the M-chip application, or you can figure out what operating system you want loaded on the chip, and specifically how much memory you need and which type of offline authentication you need, whether it's SDA, DDA, or CDA. And all those acronyms are very useful, and we could spend probably days and weeks explaining to you the differences of all of these types of things and the different options that are out there. But I think that's generally not the way a financial institution should approach the problem of launching an EMV program. I think really when you are launching your program, you really only need to ask yourself 4 questions. What type of card do you want to deploy into the marketplace, whether it's a contact card only or a card that supports contact EMV and contactless? The second question is how many cards you want to issue, whether it's 1,000 or 10,000. And we ask that simply because that's the primary driver of cost in terms of the card issuance. Whether obviously it's a volume-driven business, and the more you buy, generally the average cost goes down. The third question is which EMV profile you want to select. And as I mentioned before, you can develop your own custom profile or select one of the off-the-shelf profiles that have been developed by Visa or MasterCard. And finally, the last question is whether you want a card with a gold chip on it or a silver chip. And fundamentally, if you can answer all those 4 questions, whoever's providing your processing and personalization services should be able to quote you a product and deploy a product to the field for you. And so that's exactly the approach Shoreline takes with working with the financial institutions that we work with. The reason we kind of take the simplified approach versus kind of the more complex approaches simply because we've done a lot of the homework in advance, working with the different major processors in the U.S. to make sure that we have pre-certified products and we have products that are compatible with their processing platform. And we've done the homework of kind of taking those off-the-shelf profiles defined by Visa and MasterCard and pre-approving them. That way, as an issuer, the onboarding process is as simple as possible, and the decision-making process is as simple as possible too. And that's one of the ways we're kind of simplifying the deployment process for the majority of our issuers today. So the other thing to keep in mind is that the process of deploying an EMV chip card is very different than that of deploying a MagStripe program, simply because the supply chain and procurement process is going to be very different. I guess most of you who deploy mag cards today could go to any card vendor and procure, a batch of cards, and the turn time for those cards might be anywhere from 2 to 4 weeks. With EMV chip cards, the process could be longer, and it will depend heavily on whether your card vendor has chips in inventory, whether they're able to, and whether or not they're certified with the different processors out there. So certainly a key consideration, and in terms of lead time, on average in the industry today, the procurement process for a chip card will be around 8 to 12 weeks, if not more, depending on the volume. As I mentioned before, volume is certainly the biggest driver of cost in terms of the unit cost. the more you buy, obviously the per unit cost comes down significantly, and that may impact whether you want to do a mass reissuance or a natural reissuance of cards in your portfolio. If you do a mass reissuance, obviously you'll buy more cards in a single shot, and obviously that will bring your cost down. But conversely, that upfront cost might not be compatible with your deployment strategy, so you may choose to do kind of a naturally reissuance process where cards that are coming towards their expiry point, you just naturally reissue them and convert them from a MAG card to a chip card. And while that would lower your kind of upfront cost, your unit cost might increase simply because you're buying in smaller quantities. And finally, the last thing to keep in mind is that unlike magstripe cards, chip cards come with a finite expiry date. Mag card, you could buy a certain quantity of cards, put them in a vault somewhere, and slowly reissue them over a 2-year or 3-year period, and the card will stay the same. Chip cards, there's a finite period for which, as financial institutions, you can issue chip cards into the market because those cards come with an expiry date that's defined by the payment association. So if you buy a large quantity of cards and you keep them in the vault, you run the risk that those chips may expire and you won't be able to issue them into the marketplace because they've passed their certification lifetime. So certainly, those are all questions that you should consider and work with your processor and personalization provider as you begin moving forward with your EMV programs. And finally, as I mentioned before, one of the key considerations that you want to think about is, the color of module that you want to put on your card. Generally, the two predominant colors of modules are a gold and a silver module. They come in different shapes and sizes, but the placement of that chip on the card body is fixed by various numbers of standards. So you may want to evaluate your card artwork today and determine whether you need to modify your artwork to adapt for the chip. It would be unfortunate if your bank's logo today is in exactly the spot where the chip needs to go. So certainly work with your card providers to make sure your artwork is appropriately adapted for the placement of that chip onto the card. So with that, I just finished by saying that Gemalto and Shoreline, we are the #1 provider of EMV chip cards in the world. Gemalto produces in excess of 650 million EMV chip cards every year, and that obviously puts us in a very good position in terms of having the expertise and the supply chain to supply the U.S. market and financial institutions that we serve. With that, I turn it over to Amy and for any questions that you all might have.
Okay, hi Billy. We have a number of questions here. First one, how does EMV work for internet or phone purchases where the card is not present?
So there would be no change to making internet purchases. You would go online, whether it's to Amazon or Target or whatever, and when prompted for your cardholder information, you'd enter your cardholder information and the number that's printed on your card, and the transaction would happen exactly as it does today. The EMV chip really is used only for face-to-face transactions.
And somebody else asked a question that kind of is along the same lines. Will more fraud move to the internet because of EMV? Do you see that happening?
That's a good question. Generally, that is the trend. When a payment environment migrates to EMV, counterfeit fraud and lost and stolen fraud decreases dramatically, and the predominant form of fraud then becomes card not present or internet type of fraud. And that's been the case in the UK and in Canada, in all markets that have kind of migrated to EMV. That face-to-face counterfeit type of fraud decreases, and then the predominant form of fraud becomes card not present. There is a technology out there that helps address card not present fraud that complements EMV, and that's called, and it's a product that Gemalto offers. It's called the Dynamic CVV card. And what that is it's a card where there's a display or a little a digital display that's on the back of the card where your CVV is printed today. And instead of having a static CVV, that CVV number rotates periodically. So, and because that value rotates continuously, when you make internet transactions or internet purchases, someone who has skimmed your information and is trying to make a fraudulent transaction won't be able to do so. They need to have the actual card with that dynamic CVV code, and that really helps address kind of the internet and card not present type of fraud.
That sounds like the next step, I guess, after this, after Erwin gets up on EMV, to go to that.
Exactly. Yeah.
Someone asked, can an EMV card be PIN and signature, or do you have to pick one?
Yes, it can be. So this goes back to the EMV profile I mentioned before. There's the profile kind of defines the type of authentications that are required for a transaction, and certainly you can define that profile so that at the point of sale a consumer is prompted to enter a PIN, but there are places certainly where the merchant does not have a PIN pad, and in those cases then the card could fall back to using a signature.
As a follow-up, somebody else asked that their processor is suggesting signature when all the experts say PIN is the most secure way to go. So why are they doing that?
So there's a few reasons. Historically, on the Visa side, Visa has been a strong proponent of chip and signature, simply because in terms of convenience, it offers the most seamless experience for a consumer. On the debit side, most consumers are used to entering a PIN for their transactions, but on the credit side, most consumers are used to signing for their transaction. And the concern that most the payment brands and financial institutions have is that consumers might have one debit card, but they'll have 3, 4, or 5 credit cards in their wallet. And if you require a PIN for every transaction, a cardholder who may have 5 or 6 cards in their wallet may have difficulty remembering all of those PINs. So from the consumer point of view, there is a concern from Visa and the different payment associations that while PIN is obviously more secure, it may add to some challenges for the consumer that they prefer to avoid. And so by opting for chip and signature, you have the security of knowing that the card is real, but you're not requiring the cardholder to authenticate themselves with a PIN.
Yeah, it's hard enough for us to remember all our passwords, and we'd have to remember all our PINs that keep changing. It'd be difficult.
Exactly.
Someone asked about one of the slides. On slide 19, you say CVM for chip authentication types. Don't you mean CAM? And this attendee says that to them, CVM means cardholder verification methods, such as entering a signature or PIN. There's some confusion in the terminology, basically.
Right. Actually, so CVM refers to card verification method. And so as I mentioned earlier, one of the steps to an EMV transaction is that the card needs to prove that it's a real card and it's not a counterfeit card that someone has made in their garage. And there is a mechanism when the card is communicating with the point of sale to determine whether the card is a real card or not. And there's different ways that you can do that. The first is that you can go online. And when you go online, the card will communicate directly with the issuing financial institution, and they'll exchange cryptograms to verify that the card is a real card. In certain payment environments, this online communication may not be available. And in those scenarios, the card may need to verify that it's a real card directly with the point of sale. And in those situations, the card will communicate directly with the point of sale to verify that it's a real card and not a fraudulent card. And there's different ways that you can do that. And you may have heard of this terminology, SDA, DDA, or CDA. And these are what we call methods of offline card verification. And in SDA is what's referred to as static data authentication. And in that scenario, the card will pass will encrypt some data and hand it over to the point of sale, and the point of sale will verify that it is in fact a real card. DDA and CDA, is the same process, but what it means is that for every transaction, the card will generate a unique code that gets sent to the point of sale to verify it's a real card. In static, it's always that same code that gets verified by the point of sale.
That's a lot. I know I've been on so many of these webinars, I still get those confused. So I'm glad we simplified it to a degree for our customers. But this attendee asked about the chip card life. They had always thought the chip card was only 2-year shelf life, and you've said it was a 3-year. Can you confirm if it's a 2-year or 3-year?
Right. So as a card manufacturer, whenever we introduce a new product into the marketplace, before we can do that and sell it to a financial institution, we'll take that card product and we'll give it to Visa or MasterCard for approval. If those payment brands approve it, then they give you 3 years to sell that card to the marketplace. And that means that we can go to financial institutions and sell that card for up to 3 years. At the end of that 3 years, we'll go back to the payment associations and ask for a recertification. And as long as everything's okay, nothing has changed, the payment association will say, okay, you can have an additional either 3 years, or they may say that, oh, you can only renew year by year. And it varies by payment association. But as a baseline, all card products from the time that first certification, you get 3 years, and then the counter starts. And depending on where you are, someone may have told you that there's only 2 years left in the certification. That's probably because that card product has already been in the market for 1 year.
Somebody asked about the chips themselves. They're wondering why the silver chips are more expensive than the gold chips. Is there a reason for this?
Yes, so there actually is a cost reason. Yes, the material cost for a silver chips is actually incrementally more expensive than that of gold. But in terms of functionality, they're exactly the same, and it really just depends on whether you use a gold or silver chip. It really just depends on how you want the card to look. It's purely aesthetic.
There's another question about the expiration dates and some confusion. You said it's a 3-year expiration date once the card is used, but on their current cards, they have a 5-year expiration date. Will they need to change that? How will that work for them?
No. The expiration date I mentioned really has to do with cards that you have in inventory and when you need to issue them to your cardholders. The expiration date that's printed on a card, really, once it's out in the field, you can keep it out for 2 years, 3 years, or you can keep it out for 10 years. But you can keep it out in the field as long as you want. But once you buy a card from Gemalto or any card vendor, you have to get those cards into the hands of your cardholders before that certification expires.
This one is about the merchants. Will a merchant be liable if they run an EMV card as a magstripe card on an EMV terminal? So if someone inadvertently runs it the wrong way, can that happen?
So there are kind of fail-safes to avoid that situation. If you have a chip card, the magstripe has a little flag in it so that if you swipe it at an EMV-capable terminal, the point of sale, or it should prompt the point of sale and the merchant to say, oh, this is a chip card, so please dip it. So it actually won't allow you to swipe that chip card. You'll be forced to dip it.
Oh. Will the chip cards used in the U.S. be equivalent to the ones used in Europe, or will the members or cardholders still have to be issued another card when they travel internationally?
Yeah, so the great thing about EMV is it's a global standard um, uh, as defined by kind of MasterCard and Visa and the different payment associations that participate in EMV. So that guarantees global interoperability. So yes, the EMV chip cards that you receive that will work in the U.S., you can certainly take them abroad and be with the assurance that they will work abroad as well.
Can you give an idea of the complete amount of time it takes to deploy from their first phone call to the rep till the card actually gets into the cardholder's hand?
Yeah, so that will depend a lot on the readiness of your processor and the availability of cards and the readiness of your personalization provider. So assuming that your processor is ready and you choose one of the kind of pre-certified profiles and products that processor is able to support, and your personalization provider is ready as well. The end-to-end process could be anywhere from 12 to 16 weeks, depending on the backlog. Obviously, there's a significant number of financial institutions all kind of trying to launch their programs at the same time, and which may create some bottleneck issues, but certainly the time frame of anywhere from 10 to 16 weeks is certainly achievable.
In the video you showed, Billy, there didn't seem to be any signature or PIN given. It seemed like a less secure transaction to this particular attendee.
Yeah, so like magstripe transactions today, depending on the value of the transaction, it'll determine the type of security mechanisms that are activated. So for low value transactions today on magstripe, a lot of times you're not asked to enter a PIN or even sign it, and you're free to go. And in that particular scenario, the card he was using was a chip and signature card, but because of the value of the transaction, he was not even required to sign. And even then,
true.
we saw that the transaction took about 25 to 26 seconds.
Mm-hmm. What about the cost of deploying from setup to the cost per card? Do you have any idea about numbers for this particular attendee?
I think that'll vary a lot depending on the quantity of card you're trying to deploy and who you're working with as a personalization provider and as a processor. But certainly, I would encourage you to reach out to your account reps at Shoreline or the account reps you work with at your different personalization providers and get a quote. But primarily, the questions they should be asking you to determine that cost is, the quantity of cards, whether you want a contact or a contactless card, whether you want a gold or silver module, and the type of EMV profile you want to load there. And if they're asking you any more questions beyond that, I think it's probably the wrong approach.
Here's one a little bit confusion about the chip and PIN. Will it look if you set up as a chip and PIN, will it look at the transaction as an online transaction versus an offline transaction, or is this person thinking that the PIN is different from the PIN that it uses at the ATM? So it's a little bit. Is it the same as the PIN at the ATM?
So keep in mind that. PIN refers to a way that you verify yourself as the owner of that card. So you'll key in a PIN, and today that PIN gets transmitted to your issuer in an online transaction, and your issuer will verify the PIN and say, yes, you are the owner of that card, and allow you to proceed with the transaction. So that would be an example of an online PIN verification. And that happens every day today, whether you in a magstripe world and would be the similar type of transaction in a chip world. Certainly, there is kind of the opportunity where in some parts of the world they have what's called an offline PIN, where if you don't have this online connectivity, you could deploy a card with an offline PIN where in those scenarios you would enter your PIN, and instead of sending that PIN online for your issuer to verify it, the card itself verifies that the PIN is real and allows you to proceed with the transaction. But for simplicity's sake, PIN just refers to you verifying that you are the owner of the card, and that happens in an online mode, whether you're at a physical point of sale or at an ATM.
So here's another one about ATM. They're asking if ATM cards are required to also transition to EMV, like the debit cards.
So the liability shift for EMV requires that the merchants upgrade their point of sales to EMV by 2015, and then ATM cards and or ATM machines and fuel dispensers will need to upgrade to EMV by 2017. So if you have a MasterCard or Visa branded card that is used for debit plus ATM purposes, you won't be able to use that chip for ATM until the ATM infrastructure is ready to accept chip cards, which might not be for another year or two. If you have an ATM card that is unbranded by Visa or MasterCard, they're not required to change to chip cards, but certainly a lot of the ATM networks out there are working on chip solutions. Shazam, and the members of the Debit Network Alliance are actively working on deploying a chip solution for ATM networks as well.
This person has a concern because about the memory. They've already ordered their EMV stock, and they didn't think they had to do anything about memory, and now they think maybe they don't have enough memory on their chip. Can you explain a little about the memory and what that means?
So the memory size refers to how much memory is left on the chip after you load your the chip operating system and the application from Visa or MasterCard. And so all the chips being deployed into the market today basically start out with some amount of memory. Then the card manufacturer will load their application in their operating system, and whatever's left is what they say is a card you receive, and they'll say there's 12K of memory left or 6K of memory left. And so that's why you see kind of this variation from vendor to vendor. Vendor A may have a chip card that is a 12K chip card, and that's most likely because, and another vendor will have a 4K chip card. And the only difference between those two is simply because one vendor may have an operating system or an application, depending how they've developed it. They haven't, they've written the program a little bigger, and there's less room left on the chip afterwards, and as a result, you have a 4K chip. Another vendor may have taken the additional step to optimize their programs, and so their program takes less space, and as a result, they have 12K of memory left. So that's what's available to you as a financial institution to load your EMV profile. I would say for the 99.9% of the off-the-shelf profiles that have been defined by Visa and MasterCard do not require 12K. They do not require 4K. In fact, the memory that they require is probably less than 1K. But that does not, so I would say that you should be very comfortable in knowing that whatever chip card you buy, whether it's 4K or 12K, you'll have enough memory to deploy whatever card you're trying to deploy. The only concern with you may want to consider is if you're loading multiple EMV applications on there, and you're putting loyalty on there, and any another number of other things. But as a base case for the standard EMV profiles defined by Visa and MasterCard, memory should not be an issue.
Here's another couple questions about the chip. They kind of go hand in hand. How does the bank or credit union know when the chip goes bad, or the cardholder? And then please clarify that when the bank receives the cards, are they guaranteed that the chip won't expire for 3 years?
So could you repeat that first question? How would
they know if the chip went bad? If it would it just not work, or how would someone know? Maybe when they get scratched, do they work okay, or how sturdy are they? I guess.
So I think maybe when the way I interpret that question is by chip going bad, is that how would they know when the chip expires?
Or maybe it just doesn't work, or something happened to the chip, maybe.
Right. So the chip is absolutely functional, but the certification may have expired. So as a personalization bureau or card provider, before we sell you a chip card, where we provide you what's called an LOA, which is a letter of approval, which shows when that chip card will certification will expire, and that's just a date when the certification expires, but the chip itself will certainly still be functional. So an issuer, the first thing is before you buy a chip card, you'll want to know how long you have before that chip card product expires. Then you'll need to kind of subsequently monitor inventory you have in stock to be aware of how much stock you have and the associated, lifespan of the inventory you have in stock. And as kind of part of Shoreline's standard offer is that we monitor the inventory for you, and we keep track of this kind of chip life cycle and expiration dates, and provide you kind of alerts to alert you when a particular chip card product may expire within 6 months or a year, and giving you enough time to either consume the inventory or scrap it.
Like they do with the regular mag stripe, we always let the customer know when they're getting low. So we'll do the same thing with this.
Correct. We have the same kind of inventory and alert mechanisms in place for chip expiration, so that if a product is coming to end of life, we can alert the customer accordingly.
That's good.
Now, the other second half of that question is, are you guaranteed that 3 years for every chip? And so, as I mentioned, the clock starts running as soon as we get that approval. So if we get the approval in January of 2015, if you were to buy a chip card product on January of 2015, then yes, you would have that 3 years. But if you didn't buy that chip card from us until January of 2016, then obviously there would be only 2 years left on that product's life cycle before it expires, and so on. If one of our products will not, or let me take that back. If we generally apply for recertification, and we keep our customers aware of when our chip products will potentially expire, or if we're going to renew, we'll let them know in advance as well. And generally, we can let our customers know within a year in advance of whether our products will expire or whether they will get renewed. So regardless, you'll have a 12-month window whether to either consume your inventory or migrate to a different product.
If the merchant doesn't upgrade their terminals to EMV, will the chip card still work? Yes.
If the merchant does not migrate their terminal to EMV, then there's still a mag stripe on the card. So as a consumer, you'd just swipe your mag stripe card, and the transaction would happen as normal. If someone were to skim the mag stripe off of your chip card and make a fraudulent transaction at that merchant who has not upgraded their point of sale, then the merchant again would be liable for the fraud.
And here's another one. I don't know if you can really answer this, Billy, but it's just a comment. This particular attendee went to Walmart and spent $70 and swiped. She didn't insert the card as it was requested to do, as she was requested to do, and the reader didn't do anything. It was bypassed. Is that just probably that particular store, or?
Yeah. So Walmart has had chip-enabled terminals for probably the past 2 or 3 years, but they're kind of taking a phased approach to enabling them. I know the local Walmart in Austin and a few that I've been to have enabled those chip card terminals. So whenever I make a purchase with a chip card, I'm required to use the chip side. But they haven't done it for, let's say, 100% of their point of sales at all their stores yet. So if I was to take that same chip card and make the same transaction somewhere else, I may be required to use the mag stripe because they simply haven't activated the chip part of the terminal yet. So, but by October of this year, the merchants will have to activate all of them, and otherwise they'd be liable for the fraud.
Yeah, I've seen them in a lot of stores and they're not activated. So I guess they're just waiting until the very end, a lot of these merchants?
I think so, and simply so that they can, train their staff to be able to prompt the consumer at the point of the transaction, and so that takes a little bit of time.
And we have a couple more questions, Billy. And whatever questions we don't answer, you know, if you send them to my email, amy.gray@gemalto.com, I will forward them to Billy and get you an answer. So don't worry about that. A question: if a bank or credit union decides to go with a contact-only card now, but later they want to upgrade in the future, how would they have to change that? What would it entail to upgrade to a contactless card?
Not much. So today, a contact card, the only difference between a contact card and a contactless card is the contactless card has an antenna built inside the card body. So you would have to issue a new card which is contactless and work with your processor and personalization provider to program that contactless and antenna. But that's really the only difference between deploying a contact card and a contactless card.
And someone asked, do you have any idea how long cards will continue to have this mag stripe and a chip?
Right. So yeah, that's a question that we get a lot. One of the reasons that mag stripes still exist is because historically the U.S. was the only place that still accepted mag stripe transactions. So if you're a European financial institution and thinking about removing that mag stripe, you couldn't do so because your cardholder might go to the U.S. and need to make a mag stripe transaction. As the U.S. migrates to EMV, I think there's less and less reason for that mag stripe to continue to be on that card, and there have been discussions in different payment associations in Europe and even in the U.S. that once the U.S. migrates to EMV, the mag stripe might be disappearing, but that's probably a few years out.
And here's one more question just to end the whole session. Who holds liability when a debit card is used for an internet transaction and there's fraud? Would it still be the financial institution?
Actually, interestingly enough, for card not present transactions, it's the online merchant that always bears the cost of the fraud. Yes, so today with magstripe or chip, CNP fraud goes to the online merchant, and the financial institution is not held responsible. And that would continue to be the case for EMV.
Well, great. Well, thank you very much, everyone, for joining us. We really appreciate your time. We hope you learned a lot. And any other questions, please feel free to send them. Ones that I have names of people who asked questions, so I'm going to send the ones that we didn't answer to Billy for him to give us an answer, and then I'll send them the answer to you. Also, we'll be sending out a PDF in the next few days, and hopefully next week we'll have the recording up on our website, shorelinecards.com. But thank you very much, Billy. It was excellent. Really, really great.
Thanks, everyone.
Thank you. Have
Thanks,
a good
Amy.
afternoon. Bye.
You too. Bye-bye.